You sign an offer for $60,000 a year. You do the math in your head. That's $5,000 a month, right? Then your first deposit lands and it's nowhere close. Nothing is broken. Payroll is doing exactly what it's supposed to do. You were just never shown the map. Today, every major line on your pay stub, what actually gets taken out before the money hits your account, and the one form that controls how much tax comes out. If nobody ever walked you through this, that's normal. That's why this channel exists. Quick note, this is general education, not tax or financial advice. I'll point you to official sources like irs.gov and ssa.gov, and for your situation, check with a tax professional. First, the big idea. Gross pay is what you earn before anything comes out. Net pay is what actually gets deposited after taxes and other deductions. The gap between those two numbers is where most of the confusion lives. So the goal isn't to memorize every payroll acronym, it's to know which lines matter and what each one is doing to your take-home pay. Line 1 on almost every stub, gross pay. That's your earnings before anything is withheld. On a $60,000 salary paid twice a month, gross per paycheck is $2,500. Before a single dollar of tax or deduction. Everything else on the stub is a subtraction from that number. This is an illustrative example. Your pay schedule and amount will be different, so always read your own stub. Next up, FICA. That's the payroll tax bucket most employees see split into two lines. Social Security is 6.2% on wages up to an annual cap that changes each year. Look up the current cap on ssa.gov. Medicare is 1.45% with no cap on wages. Together, that's 7.65% coming out of most W-2 paychecks. Your employer pays a matching share on top of what you see withheld. On that same $60,000 example, 7.65% all year is about $4,590 in FICA from your side alone, before federal income tax, state tax, or any benefits deductions. That's why a $5,000 monthly salary story falls apart fast. Again, illustrative math to show the stake of the stub, not your exact numbers. After FICA comes income tax withholding. Federal income tax is based on your W-4 and your pay. It's not a flat percentage like FICA. State and local taxes depend on where you live and work. Some states have none, others have their own brackets. You'll usually see these as separate lines on the stub. The key point? Withholding is a running estimate toward your annual tax bill, not the final amount you owe. But here's the mistake that quietly costs people the most. They fill out a W-4 once, at a new job, and never look at it again. Get married, pick up a side gig, or start claiming dependents, and your withholding can drift way off. Too little withheld, and you owe in April. Too much, and you're giving the government an interest-free loan all year. The W-4 is the dial. Your stub shows whether the dial is doing what you think. In about a minute, I'll give you the pay stub cheat sheet to screenshot, every line to check in under 2 minutes. But first, the deductions that aren't taxes but still shrink your deposit. Pre-tax deductions come out before income tax is calculated on what's left. Common ones: retirement contributions like a 401k, health insurance premiums, and sometimes HSA or FSA contributions. These lower your taxable income for federal withholding, which is why maxing a 401k can change both your retirement savings and your take-home. Post-tax deductions, like Roth 401k or some union dues, come out after taxes. Read the label on each line. After taxes and deductions, you hit net pay, the number that actually deposits. On that $60,000 example, with typical withholding and a modest retirement contribution, semi-monthly net might land around $1,600 to $1,800 per paycheck. Wide range because W-4 settings, state taxes, and benefit choices all move it. The lesson? Always budget from net, never from gross. Here's how to read any stub in 4 passes. 1. Find gross pay and confirm the pay period matches what you expect. 2. Scan FICA, Social Security and Medicare, and make sure the rates look right. 3. look at federal and state withholding and ask whether your W-4 still fits your life. 4. List pre-tax and post-tax deductions, then read net pay. 4 quick passes and the whole stub makes sense. Now, the one thing nobody tells you about withholding. A big tax refund feels like a win, but it usually means too much was taken out of every paycheck all year. Owing a lot in April usually means too little was withheld. Neither is a moral failure. It's a calibration problem. The IRS has a withholding estimator online if you want to check whether your W-4 is close. Adjust when life changes, not just when you start a job. Here's your 2-minute pay stub cheat sheet. Screenshot this. 1. Gross pay and pay period. 2. FICA, Social Security at 6.2% and Medicare at 1.45%. 3. Federal income tax withheld. 4. State and local tax if your stub shows them. 5. Pre-tax deductions like 401k and health insurance. 6. Net pay, the number to actually budget from. Run through your next stub with these 6 lines, and the mystery disappears. That's the map. Gross is what you earn, net is what you keep, and everything in between is taxes and choices you can actually see on the stub. If this helped, the free Adulting Starter Kit in the description has a first paycheck checklist plus a simple budget template. Next up, the math on renting versus buying that most people never see. Subscribe so you don't miss it, and check irs.gov and your own stub for your numbers.